Maria's Pizza and Pasta. Are you ready to rock? Hi everybody and welcome back to CapitalRev. I know it's been a very long time since I published on this channel. I have no excuse. Get past it. Okay, so this video is going to be broken up into a few sections. First, I'm going to talk a little bit about my own history with Bitcoin and where my biases are and where I'm coming from. I think it's important for you to understand that. Second, I'm going to talk a little bit about different types of investors, and one type of investor in particular is being locked out of the Bitcoin trade in my estimation. And I'm going to finish up by talking about how that group of people who are heretofore or have been locked out of the Bitcoin trade can actually participate in it if they're so inclined. So let's get into it. Okay, in case you don't happen to have your Patrick Doyle's Thoughts notebook handy, I'll just describe what my own history with Bitcoin has been and where I'm at now. So you may not remember, but a few years ago when I was living in Asia, I published a video on this channel describing why I thought Bitcoin was a bubble. And I held that view until last year when Paul Tudor Jones came out with a pretty compelling sounding argument for why it's actually something worth considering. And based on that, I started buying it and selling it to the point where I now have some at an adjusted cost base of 0. So I basically have some free Bitcoin based on my buys and sells of the thing. And I'm going to neither add to the position nor remove from it because I think there's some very intelligent arguments for why Bitcoin's going to the moon and some very intelligent arguments for why it's going to 0. And I've been around markets long enough to know that if you're presented with two compelling arguments that are contradictory and you have a call option on one of those things coming to fruition, you should just do nothing. So at this point, I think I'm pretty well positioned because if it does go to the moon, fantastic. And if it goes to 0, no harm, no foul. I think Bitcoin's an interesting phenomenon though, because it drives home the point that not all markets are ideal for all investor types, right? So in my estimation or in my experience, there's two types of person who participates in public markets. On the one hand, there's investors. Those are people who buy an asset in order to receive cash flows from that asset, whether it's an apartment building, common stock, whatever. They buy a thing in order to receive income from it. And then there's speculators, and speculators are people who simply buy at price X and want to sell at price Y. Actually, or most of the time they actually don't have a price Y, they just buy because they'd go up. That's what a speculator is. And there's no right or wrong way to do it, but I would say that the Bitcoin phenomenon has really been geared toward speculators, right? Like it's only something that speculators have been able to participate in because there's no real cash flow from Bitcoin, right? It's sort of like gold in that regard. And that's what I want to address today. I want to actually point out how it's possible for people who want to receive income can participate in the Bitcoin thesis if they are so inclined. Okay, so I think the best way for an income-oriented investor to participate in the Bitcoin phenomenon or madness of crowds, depending on your perspective, is to write short puts on a company called Microstrategy. And let's unpack what all that means. So what is a put option? A put option, for those masochists who read my stuff regularly on Seeking Alpha, know that I love the short put strategy. So a put is an option. It's a type of option that gives the holder, the owner of that option, the right, but does not impose the obligation to sell a certain asset at a certain price for a certain period of time. And there's the other side of that trade, which is the person who writes it or sells it. They're considered to be short the option. And I love that trade myself because it gives me the opportunity to lock in a great asset at a price that I want to pay for that asset. So let me drive the point home a little further by using Union Pacific, a great railroad company, as an example of what I'm talking about. Now I'm pulling these numbers completely ex recto, but I'm going to hopefully make the point. So let's say you, as an investor, have a thesis that trade between the United States and Mexico is going to increase massively over the next 10 years. And you know that Union Pacific has the 6 entry-exit points between the United States and Mexico, and they're going to benefit massively from that. So you have a thesis that suggests Union Pacific is going to be a great investment going forward. But because it's currently trading at $200 a share, you as a good investor know that your long-term returns are a function of the price you pay for an investment. You don't want to pay $200 for it, but you are willing to pay $150 for it. And you have two choices at this point then. You can either wait for the shares to drop in price from 200 to 150, and that's interminably dull. Or you can short a put on Union Pacific. You can go to the market and say, hey market, I'm not going to buy Union Pacific at $200 a share today, but I will oblige myself to buy it at $150 for the next, say, 6 months. And for taking on that obligation, you, Mr. Market, are going to give me $6 today, right? So you put $6 in your pocket, and one of two things are going to happen at that point. Either Union Pacific shares are going to stay above $150 for the next 6 months, in which case you just pocket your $600. There are worse things in the world than getting, $600. Or the shares are going to drop below $150, at which point you will be obliged to buy the shares back at $150. Or in a net price of 144 actually, because 150 minus 6 is 144. But that's cool too, because you said to yourself, look, I'm willing to hang on to this thing for the next 10 years, and I am bullish on Mexican-American trade, and therefore Union Pacific's going to be a great investment for me over time. I'm going to receive some great dividends from it going forward. So at this price, I'm very happy. That's why I think short puts represent a great win-win trade for people, and we can do that same thing on Microstrategy. If you are a Bitcoin aficionado, I know you know what Microstrategy is, but in case you don't, I should point out that Microstrategy is a software company, an enterprise software company that's been around for years. It's made money for years, but really it's a play on Bitcoin right now, because between 70 and 75% of the capital structure or the balance sheet of Microstrategy is made up of a Bitcoin investment, right? So I ran a regression, because I'm that kind of stats nerd, on Microstrategy stock since they purchased Bitcoin and the Grayscale Bitcoin Trust in the United States, and it's a 0.953, so the R value is 0.953. So these things are very, very tightly related. So as Bitcoin's price goes, Microstrategy's price goes, right? So if you are bullish on Bitcoin, a purchase of Microstrategy makes sense to you, because 75% of the sucker is made up of Bitcoin anyway, so just go along for the ride. The other thing I want to mention about Microstrategy is I did a thought experiment on it and asked myself, okay, what would Microstrategy be trading at were it not for its Bitcoin investment, right? So I looked at its valuation over the last, say, 3-5 years, I think it was, and said, okay, what sort of multiple was the market giving to these shares based on its earnings, based on its cash from operations, based on its free cash flow, based on its book value? And based on all that, the value of these shares should be between $155 and $175 a share today. It's currently trading at about $700, so there's an enormous premium that the market has placed on this Bitcoin component of the Microstrategy market cap. So this is where short puts come in. An investor who has a perspective on Bitcoin can sell a put option on Microstrategy stock and receive some income from that today, right? So depending on how bullish or bearish you are about Bitcoin, you can sell a put at a different strike price on Microstrategy and receive income from that today. And because I'm that kind of person who's absolutely obsessed with making your life a little easier, dear viewer, I've actually gone to the market and looked at various strike prices for December puts. Today's St. Patrick's Day 2021. Happy St. Patrick's Day. My favorite day of the year. Okay, so given that Microstrategy is trading at about $700 today, you'll receive the following premia or income from your put options at various strike prices. Okay, so let's go through it. So the December put with a strike of 160 is going to earn you $580. So when Microstrategy is trading at $700, if you oblige yourself to buy at 160, you're going to receive $580 to take on that obligation, which is interesting. If Microstrategy's normal value should be between $155 and $175, that thesis would assume a Bitcoin at a basically zero price. At the same time, if you're quite bullish on Bitcoin and you're willing to buy Microstrategy at today's price for the next several months, between now and the third Friday of December of 2021, you'll earn $22,400 for the taking on the obligation to buy 100 shares of Microstrategy at $700 a share. So and there's a host of strike prices between them. I'll publish them on this video. But the idea is that depending how bullish or bearish you are on Bitcoin, you can actually earn an income based on your willingness to buy this Bitcoin proxy at a certain price between now and say the third Friday of December, or there are other months as well, but I'm just picking on December. So that, in my estimation, is a way for people who have until now been locked out of the Bitcoin trade because they need to receive income for their capital. That's how an income-oriented investor can participate in Bitcoin. I'll conclude this short video by pointing out that this isn't me soliciting a trade. This isn't me suggesting that you do anything with your capital. Before you place this trade or any other, you should talk to a financial advisor about your own specific circumstances. I don't know your specific circumstances, you being camera and giant eye-burning light. I don't know what your circumstances are, so I don't recommend this trade unless it's appropriate for you, obviously. The purpose of this little video was for informational and entertainment purposes only. If this was informational for you, that's great. I'm happy about that. If this video is a source of entertainment for you, I don't know what to say. I'm sort of sad for you, actually, because there's much better sources of entertainment out there. You know, you can check out Cobra Kai, check out The Expanse. Those are great series if you're a TV person. Anything with Jussie Smollett or Brie Larson, those are entertaining. You know, there's lots of great sources of entertainment out there. And so if you look to this as a source of entertainment, I am frankly sad for you. That's pretty much it. That about wraps her up. Thanks for watching. Other YouTube personalities say that it's important to get you to subscribe, ring the bell icon to be notified when next I post a video about something. That's apparently important, so it's really important to me that you do that. Critically important. So go ahead, hit all those buttons. Press my buttons. Goodbye.
Come and cry there and twitter in the chimney, but I go forever and come.